much for the intro. And I want to mention a little bit about the organization that I represent because it was one of your questions. Ascendus is not a bank, it's not a financial institution like we all know. It's a CDFI, that is a community development financial institution. What we do is this type of activities. The financial mission that we have is for you guys as entrepreneurs to provide the education, the support to understand the process when you have to apply for a business, or for buying your major asset, like a building, a warehouse. So we are trying to provide the tools for you to be loan ready, like we mentioned. Ascendus has been in operation for the last 35 years. Like I said, we do micro loans because for large loans, we will be working with banks. That's the idea. And we are nationwide. We are the CDFI that we are nationwide, so we could do loans everywhere in the country. Today's workshop is going to be identifying credit as an asset. Most of the time, we understand that credit could be something that we don't understand. We need to be sure why when we are going to a low process, my credit as a business owner will be poor. And that's the reason we are here with the support of the Credit Builders Alliance. Ascendus is part of this organization. We receive their support to make the idea of credit something simple, something that you could use for the benefit of your business. So any question you will let me know in reference of what do you need to know. Okay, so as I mentioned, this is the organization that I represent, microfinance. Microfinance, remember that it was an idea that Mohammed used the Nobel Prize, putting the minds of entrepreneurs and banks and all the ones that they are trying to understand that access to capital is a human right. It's something that we all need to work in order to be sure that all our communities are successful. Like I said, we are in business since 1991. We have been doing a lot of loans, and that's very important for us. And I invite you to visit our website where you could read a lot of the good client stories that we have, not only in Miami, all in the nation. When we ask what is credit, we know that the question will be related buying now and probably paying tomorrow. We know that we have a different type of timing in reference of payment our debt. And as I said at the very beginning, trying to understand that credit is always an asset. It's not going to be a deficit. How we are going to change our mindset, understanding that credit is something that is going to be opening doors, and probably when we are buying a home, we know that credit will be very important to have a good score just to get a good interest rate. When we are renting an apartment or we are going to rent or sign the lease for our business, that's something that is going to check our credit score as business owners. The same for sometimes to get an insurance policy. So our credit will be making or will be affecting all the major decisions that we are going to make as business owners. So what is going to be the benefit at the end, having a credit score higher than the typical media credit score? We will be, like you said before, accessing capital in large loan amount because that is going to indicate the idea that I could manage credit and I'm not going to overextend my ability to repay. And also to obtain working capital. There are three major agencies, like you may know, who are familiar with Expedient, Equifax, and TransUnion. Do you check your credit? What about you, sir? Typically, you have an idea. What about you?
Yeah, alerts and stuff.
That's good. I mean, we're always saying that we cannot be having a nightmare related to credit because sometimes, like you said, you receive an alert, your credit went down. Okay, yes, went down because as business owner, I made a major investment. I have to buy equipment, or maybe I was booking a trip for my employees or something different. So those alerts are going to indicate a fluctuation maybe on the credit score. Most important for us is to consider Experian and Equifax. TransUnion is very generous sometimes in terms of the score, but technically it's not the agency that the banks or the financial organizations are going to check. Sometimes when you are buying an auto loan, TransUnion could be playing a role, but not really. And when we are buying a house or a real estate, there is a 3 verse credit. So it will be an average between the 3 agencies. What is credit history? What we are going to find on our credit report? Typically, credit cards, loan, mortgage, the utility bills, and I'm sorry, medical bills is something that it was after COVID, it was removed, but anyway, it's still there because it was traditionally something that we used to find if you were having a collection with some medical bills. It shouldn't be affecting liens or public records. It shouldn't be on your credits. Yes, everything related to bankruptcy. Because remember, if you are in that situation that you need that major assistance for your life, bankruptcy will remain on your credit. Here you could see in detail everything that is going to be affected. There is something that we used to do as consumers sometimes that we are maybe upset with one creditor, or we don't like that credit card that we were using at the very beginning of our credit life. And we decided one day that we are going to close down or shut down that account. This is the major, mistake that you will be making because you will be losing time in reference of your credit history. Because if you are closing that credit card that you open up 20 years ago because you are not using that credit card, your credit will be affected. It will be a low credit score that you will see. You will be receiving the alert. Your credit score went down. Why? Because you closed one of the accounts that it was probably the longest account that you have on your credit.
Even if you're good, I'm sorry, even if you're in good standing.
Yes, because you are losing the time or the time of building good credit history. Most of the time it's very important for you to avoid closing credit cards or accounts on your credit. Let's leave them there and the creditor will be naturally closing down that account. And that is not affecting your score. Why? Let's say that you have the Macy's credit card. Most of you know that Macy's, it was part-times, it was back in those days. So let's say that you had that credit card and the business is no longer there. And you said, oh, I'm going to close that, switch names technically, right? But you will be saying, okay, I'm going to shut down that account. I'm going to call them, the customer service, just to say, close my account. You will lose the time that you had that credit on your credit history, affecting your score. If you are leaving that card there and the store change name or the store is no longer there and they are the ones shutting down that account, it's not going to be affected.
Okay, so you're saying if us as the customer close the credit card, I mean,
call
the account, then we get penalized. But
Yeah.
if they do it, we don't.
Exactly.
Oh.
So the idea is always not to get penalized. I like that point because that's very unfair because you are not using that account, but the reality is that your credit will be affected. Remember, the foreclosure will be there on your credit for 7 years and bankruptcy as well. What is very important for me to remind you is the level of credit inquiries. When you are in the process of applying for a business loan, try to avoid this type of shopping around that we use to do sometimes as a consumer, that we apply here, there. Why? Because the car inquires will be there on your score for at least 2 years. So that is going to be making some kind of assumption from the lenders that you are, again, shopping around. Why you are in desperation mood, applying here, there, with lender A, B, and C. So that's something very important, yeah.
Okay, so what would you recommend like for a business owner? They want to get a loan or X, Y, and Z, right? And they need to get a good rate, because everybody gets a different rate. What would you recommend in a business owner in order for them to get, like, not to chop them out so much and then get half it?
Yeah, that's an amazing question because it's much better for the business owner to have a relationship with the CFI, with the bank, and probably ask the business banker. Run this scenario. I'm a business owner. I have been in business for 40 years. This is my tax return, and this is a copy of my pre-karma report. This is my score. How much I'm going to qualify? Tentative. How much is going to be the monthly payment? What is going to be the interest rate? You should be running a scenario, not making, or you should be asking, is this going to be a hard pull or a soft pull? Everything that is a soft pull, there's no record, no inquiry. Do you follow that
It's
idea?
a hard one and soft one.
We are going to go there. Let me see if it is moving.
Oh, wait, can you go back?
Yes,
Bankruptcy, you put there 10 or 7 years. That depends on the chapter bankruptcy you do.
it's going to depend on the chapter of you are doing exactly.
Okay,
Yeah.
so it depends, right?
Yeah. Chapter 7, 10 years, or chapter 7, chapter 13, I'm sorry, 7 years. Okay.
They went home.
And chapter, yes, that's something that you have. Let me tell you something very clearly. It's going to affect and it's going to appear on your credit. The rule is 7 years. Let's put it that way. But don't be surprised if somebody after 10 years are still reporting. We are seeing that, and there's no way to fight or get it removed. You will be getting a remove probably for a couple of months, and it's going to appear again. It's going to depend on the agency. So it's very still complicated. We have rights as consumer, but anyway, they are reporting, and obviously, if you have been with issues with, let's say, checks, and you have their credit cards under bankruptcy, that information will be more than 10 years. So probably you are not going to get a business loan with Chase, just mention one bank, because a long time ago you owe them and you never pay them back. So that's the rule. It's like I'm here and I'm asking you, may you lend me $10? You will be saying, okay, I'm going to lend. I'm not paying it. If I'm being here again, I'm asking, hey, may you lend me $20? You will be saying no, because one time he lent me 10 and I never paid. So it's common sense. So be very careful with that, because sometimes we have the perfect credit, the perfect cash flow, the perfect business, and there is something that is not adding. And there are some accounts that we had the conversation before, everything that is SBA, student loans, FHA with for mortgage, if you are not paying, that's something that is very heavy on your credit, okay? So the impact will be more difficult to overcome. The same with child support, right? Something that is going to appear on your credit, or until you could release the debt. What is not on credit report? We know this type of information, my affiliation with any party, petition. So those are information that is not on our credit report. Basically, it's protecting the consumer, and we are always saying the same. A high credit score, we had that conversation before in reference a business owner trying to get a large loan amount. If you have a weak credit, it's always be an indicator that probably you don't know how to manage them or large amounts of money, and then you are not going to be approved for the 250 of the $500,000 or whatever amount that you are trying to apply. Because you have credit is good. Remember that we were saying credit is an asset. So we have sometimes the conversation with individuals that they are saying, hey, but I don't have, I have 700 credit score or 800 credit score. When we do the soft pull that at my organization at Ascendus, we do a soft pull, we find or we realize that there is only a credit card for $300. So that's the reason this client has a good credit score because there is only one credit card, but the limitation is really very limited. So how we are going, try to think as the lender. How from the $300 credit card are you going to jump to the 50,000 business loan? It's impossible. So you need to start building credit and diversifying credit. So that's very important as well. This is something that we have been mentioning about the time, the length of credit history. So that's very important. Is making the 15%. That's the fact that I mentioned when you close a credit card that it has been on your record for a long time. Immediately it is going to be affected. The type of credit that you use, revolving and installment. Do you know which one is an installment account on your credit report?
Housing,
Housing. Why?
there is a fixed money and then you need to keep paying it.
Installment monthly payments are provide that information by mortgage, your auto loan, your student loan, all the ones that you are making monthly fixed payment. That's the idea. The revolving account, any example that you may think about it?
Credit card.
Yeah, we have someone here that you know all the tips about credit because the revolving accounts are the credit cards. We are providing, we receive authorization to spend $3,000 with my credit card. I use 1,000 and then pay the full amount. I'm having a still the 3,000 in availability to use and pay. Use and pay, that is a revolving account. So conclusion, we need to see every time that we are applying for credit, a diversification, not all revolving or not all installment. So that's very important for you to consider. Is that clear or okay? Then this is something as business owner we see very often, the amount we owe. What is going to mean? If I have that credit card for 3,000 and I was using 2,900, is that a good moment to apply for credit? Technically, we should be saying no. Why? Because we are seeing, or the financial system will be checking that whatever amount I'm lending is the amount that I'm using. It's good? Yeah, probably it's good because you guys as business owners, you need the money. But that is going to indicate, try to avoid to apply for more money when you have the maxed out your business credit card. That is the golden rule. So you will be saying, hey Fabiana, so what we should be doing, when we should apply? If you have in mind that you have to achieve a major, commitment or a major asset, try to do the following. 2 or 3 months before that contract or 2 or 3 months before that event, avoid using your credit cards and try, if possible, making more than the minimum payment. What is going to happen then? Your credit score will be going up. Then you're approved for the business loan and you could be using the money again. So try to be smart in the way that you are using your credit in order for your credit to be opening doors, not closing doors. Remember what we said. Credit is an asset. Sometimes we have businesses, or back in those days, I used to do a mortgage. I know that it's not going to be bad, that program, that it was a stated income, a stated assets. So you could say, I'm Fabiana, I'm making 300 per year, and I have a bank account for 20,000 to saving account for 20,000 and my credit score is 730. I was able to buy a beautiful house for whatever value because it was a program that it was a stated income, a stated asset because of my credit. So, okay, we could have the conversation. What happened with the bubble, the financial crisis? We know what happened. But anyway, sometimes having a good score is going to avoid you guys as entrepreneurs to show certain documentation. As instance, you want to apply for a personal loan, something different from business. What is going to be checked for a personal loan? Your credit. Simple like that. Your credit. So your credit is an asset. Will be giving you the alternative, probably to have a personal loan for 30,000 at a good interest rate, 11.99, or I don't know. Remember that prime is 8 point something. So other than that, it could be a good interest rate. Like I said, the inquires is 10%. So every time that you are, we know we live in Florida, we need cars. Every time that we are going to buy for a car, what happened? All the dealers, they will be pulling my credit like 5, 8 times. Technically, should be counting as a one inquiry, but try to avoid or ask them. Do not put my credit application to several banks. Or you could have an approval from your own bank just to buy the car or the vehicle that you need for your business. Or the other way that you could do this type of thing, ask, are you going to be doing a hard pull with 5 institutions? We know that the dealership is trying to get the best interest rate for you. Why? Because they want to sell the car or they want to sell the van. So they are looking around for 5, 6 banks just to get you the best low interest rate for you to sign the contract and grab the keys and have the car. There is a reason why they are not doing that because they have free time. No, they are doing that just to get you the best interest rate. But anyway, always ask. Or if you are a business owner and you need money and you need to apply for a business loan, do not apply for the business vehicle and do first the business loan. Why? Because you know that buying a car, it will be an alternative that they could be asking for or showing your credit to 5 different banks. Are we good with that idea? And then, what are the best practice? At least to have 3 active lines of your credit with good management, good payment, no late payment. Late payments are always a red flag. We know that. So if you have a late payment on April and you are applying for a business loan on May, that's a red flag. What happened? So payment on time is really very important. 6 months of history. Always it's good to have some kind of, education about the credit that you are taking, if they are reporting, because reporting is always important for you. Some lenders are not reporting, and we are going to get there just for you to understand why they are not reporting. This is the information for the annual credit report that comes where you could get a free copy of your credit report. Did you try to get a copy of your credit report at the annual credit report anytime? Or sometimes, or are you familiar with the annual credit report?
Yeah.
Yes? What are you seeing there?
Everything that all the credit cards, everything that I've paid and how long.
Yes, that's true, but you're not going to see your score.
Oh, yeah.
It's only like you said, is all the credit cards, your address, your name, your date of birth. So it's always important to, if you're applying for credit cards or business loan or buying a house, always try to use the same formula. If you have 2 names or 3 names and you're using only 2, always apply with these two, your first name and last name. If you are adding the middle initial, and this is not something typical, probably your score will be not really very accurate. Remember that you could have access to there's no need to enroll, that's a rule. But anyway, your bank account, your major financial institution is providing you guys a score. Bank of America, they have that, Chase, they have that, Capital One, that currently they are in a merge with Discover card, they have that service, they could give you your score. So there's honestly no need to pay $14, so I don't know how much is that for Experian or Equifax. Honestly,
It's free, they're not supposed to pay.
you could, no, if you want to have, there is an enrollment. If you want to have your Experian credit report every single month and receive alerts, there is an enrollment. But you could get it for free. Okay, if you have a large,
Hold on. I'm sorry, I didn't get it. You need to enroll, typically you sign into any of the three credit report agencies and then get your report.
you could get one free. At the annual credit report, you will have one report per agency per year. So you should be asking Experian right now in a 3 months Equifax, and by the end of the year, TransUnion. That's the rule and it's free. It's not going to give you the score. But if you want your score monthly, Equifax has a service and they charge for that service. The same TransUnion and the same Experian.
Yeah, usually your banks too give you that already.
That is the best
Or
solution.
when you go pull your credit, they put your credit report, legally they give you the report for free.
That's true, but your bank right now, it could give you,
The credit report,
yeah,
I have Chase and Chase, like in the
See?
app, it gives it to you for free, it's there.
and it's really good what the banks are doing. Why? Because remember, the banks, they like to lend. They are there just to lend money and to make money with our money, with the deposit that we have. And if they are lending money to us, what they are going to do? Charge interest. So they want us to have a good score just to lend us money. We use that money, we pay interest, and they are making money. So they are saying, how, like you said, Chase is telling you how many trade plans do you have. If you are increasing the debt on a credit card, immediately pops up. If you are lower 1 point, it's saying that. If you are higher 10 points because you lower the revolving account. So honestly, for me, there's no need, but we have people that you see on, or you review when you review the business bank account, Experian, $14, Experian. But, you know, probably you could say, it's not a big saving, but makes no sense. What I was going to mention is what is the best technique, if we could say, if we want to lower the revolving or the credit cards, because we are in the process for applying for a business loan or buying our house. We have two major situations. We do the snowball, that we are paying the lowest balance, and then the credit card that has the highest balance. It's a good technique because technically we are going to see on our credit report, or it's a good advice for your business owner. If you have a low balance on a credit card, you pay it in full, your credit will be immediately up for a couple of points, and you will see that trade line close. So that's amazing. That's really good. But if you're doing the other situation, you will be probably analyzing what is the interest rate that you have on each of your credit cards, and then you make the decision. If I have a credit card that is 28%, probably will be good to pay that credit card because I have 28% and leave and make the minimum payment always for that credit card that I have 11%. So that is another technique. What is the difference? Technically, this is exactly. This is the best approach because we are going to save money and we are going to have some additional cash flow in our pocket. So probably we are going to do other expenses. But anyway, if you are using the other technique that the snowball is more, you will be feeling the freedom of debt free. So that's something very important. I like to mention that I'm not personally a big fan of the debt consolidation. Do you know what is debt consolidation? Okay.
For example.
You are giving all your credit cards to an agency. The agency will be charging some money monthly, and they will be making the payments for you. And they will be reporting, they will be saying, do not pay the credit cards, we need to show that you have a hardship that you cannot pay. So they will be, the credit cards, they will be reducing the debt or the interest rate. Why I'm not a big fan? Because you are going to have a sign a letter, do not lend to me for the next 4 or 5 years until I could finish the debt consolidation. As a business owner, you are closing doors because my credit will be exposed. And even the fact that I don't have the bankruptcy, that it will be there for 7 years, I will be having that sign up. I had 6 credit cards. Right now, I cannot pay them in full, so I need a repayment plan. That's the message. And I'm going to go to my bank to change to whoever. Lend me money, you're gonna have to you, I'm going to pay. That's the message. So be very careful. I'm not making a judgment. If you have to do it, you have to do it. But it's very important for you guys to understand how you will be seen when you are trying to apply for a business loan.
Can you explain to me what is debt snowball and debt avalanche?
Remember, the snowball is going to mean that you are paying the credit card that has the lower balance. So you have a credit card for 700. So you are right now paying that 700, and then you have next month a credit card for 2,000. You are paying the accounts gradually. So you have extra money, you are paying. So then your credit score will be reducing the level of debt, and your score will be up. If you're using the other technique that we mentioned in B, it will be that you need to pay as per interest rate. There are some credit cards that they have high interest rate. So if you are paying first, those you will be having extra money, and as a business owner, it will be more impactful because you will have money for other things, and you could do that. It's an idea how you could try to pay probably faster your credit card. So that's the reason I mentioned the consolidation, because the consolidation is another technique that is going to cost you money and it's not going to be positively impacting your credit, because information will be saying there. Credit card or amount paid for lower than the original balance. So it's not really very positive. Is that okay with you, sir? Or are you, if you have any other question, let me know. And going to the main point, what about the business credit? There are 2 major agencies. One is the Dun and Bradstreet, and the other one is the Equifax for a small business. How we are going to establish credit for our business? Dun and Equifax for a small business are being checked, analyzed, getting information and report. Major banks are going to ask, what is your credit as a business owner? And they will go to Equifax, a small business most of the time. But they could use as well Dun and Bradstreet. How we are going to establish credit with these 2 agencies? You need to be very sure that you have your name really properly set up. If you are an LLC, if you are an S corporation, that information has to be with, let's use DAS, with the DAS. If you do not have the EIN, you need to have one in order for them to report your business or to create your business credit history. You need to open a business account. Also, if you are a business owner, you will have a business account with a financial institution. And you need to establish credit with vendors, with suppliers. That's me. Let's say that I'm a painting company and I'm working with some company that they are selling to me the materials and the equipment. If I have Fabiana LLC, the address, my business bank account, and I'm having credit with this company that they are providing me the materials and paying for my company, they will be creating, they will be reporting to Equifax and to us, and they will be creating a report for me as a business owner, or for my company, different from me as an individual. Are you familiar with dance? No, okay, that's weird, because most of the business owners, they are, that, this is another organization that they dance most of the time. If you go to that website, that is like the name, you Google the name, immediately you will be directly to their website. You put the name of your business, and for free, they will be giving you the identification where your business is recorded with the dance. So you will have a number. If you want a report for your business, they will charge you. So that's a different story.
But the number is free,
Exactly,
but they charge you for,
very expensive
yeah, what is it that they charge you for?
for the service. Just to give you a report, and I'm going to show you what is the information. The main
Actually-
issue
Actually,
is,
the problem with the dance and brand sheet. Earlier, about 2-3 years back, until then, it is a mandatory to SAM.
yeah, that's for contracts and
Let me, so it was a kind of an mandation. When you apply through SAM, they have to issue the dance and brand sheet, DNB number right away. Now that's, if it has been removed. So now if you apply to dance and brand sheet, they will make sure to extract money from you in one way or the other, and you need to be extremely careful in receiving lot of the spam. Say you need to pay $120 to get this, like, and over that one, the done and sheet will be directly contacting you and making sure you are feeling guilty.
yeah, it's, again, for me, it's very personal, the decision. There's no need, and specifically for everything that you mentioned, to be and having a relationship, a paid relationship with them. Because at the end of the story, my personal credit will be most important than that, unless, because right now I want to do business with the government, or I want to be in the contract, there is another alternative, because they realize that they were really very expensive, and like you said, they were charging for everything. But the reality is that you have a number, and this is for free. And the Equifax for a small business is a report that the banks could get in addition to your personal credit. And let me show you how it's going to be, or how different is going to be the way that we analyze. We were talking about credit history, time in business, the time that we have the credit cards. So if we close a credit card that we opened 20 years ago, it's going to affect our credit. See here, the reference that we have under the paid business credit score, that is the one that is used by these two agencies, mainly with them, it will get the information for the last 2 or 3 years. So see how different it's going to operate the personal credit score. That will be really very important to apply for a business loan, buying a house, buying insurance, whatever. But for this paydex, the history will be only for 2 years. What happened if Fabiana, that has that painting company, is no longer having credit with this painting company that they were providing me the materials and everything, and for the last 2 years, I'm not having any report. My score will be inactive or 0. So again, if you have a business where you have providers, probably will be good to us. Are you reporting? Are you creating a credit history? It's not mandatory, remember, because your personal credit will be key. But anyway, it's not going to hurt for you. Right now, you have the knowledge that probably this is something that is going to help you. You have credit with your provider, and in addition, you are building credit for your business. So you have your personal credit score and your business paydex business credit score. And see the scoring. This is very important as well for you to see. We saw during the presentation that we have credit from 500 up to 800. But this is amazing. And see what is the maximum credit score for business. From 80 to 100. that means that your business is really low risk, that you pay on time, and probably you will be accessing all credit. So if you have 40, 30 points as, you know, as a business credit, you will be considered like the high risk. So that's the difference. For me, it's important for you today, not only to do the networking between the business owners that are here today, also to understand that credit is a real asset that is going to open doors, that depending on the time that you are filling out an application, you will be getting the more money that you need and the best interest rate. Sometimes we need to apply when our credit is a little more affected. So then we will know why. I was having a conversation with someone that she mentioned that she has 639 credit score, personal credit score. That is good. It's not a bad credit, but she was looking for our maximum 100. She's not going to get there. So what we did is we ran the scenario. Wait, try to see what is the account that is hurting you for the 639. That is a good credit. If you're buying a car, probably they will be having the car because the car has a collateral. When you are applying for something that has no collateral, that is cash, the limitation will be more under our, under the fact that we have a low credit score. So, and with this, I'm going to conclude. I'm going to leave you here my contact information. I will be giving you my business card. What is